Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. It is the 25th. We've got a busy week ahead of us. Over 100 companies doing their earnings, including all of the big tech companies. Also, we've got FOMC on Wednesday. But in the meantime, today, this Gamestop thing. Well, on Friday, Gamestop, if you were not around or you haven't been reading the news, it just went absolutely nuts. So I did a little bit of calculating over the weekend. I think that there could actually be more in this. I don't know if it'll be something that we'll really be able to take advantage of because it's just going to be a madhouse. I am certain that as soon as that thing opens up, there is just going to be a million people trying to buy up as much of it as they can. So yeah, we got some crazy stuff to look at. Also, maybe some Bitcoin stuff for you guys today. But let's go to the charts first, yeah? Well, the E-mini over the weekend, unchanged for the most part, a little bit of a rise, a fall, and now it's bouncing. Nothing too crazy over there. More interesting in the Treasury complex, pretty solid move up, and I believe that this is mostly due to like month-end buying and so forth. Apparently, there are kind of some imbalances over in Europe that are creating more buying than usual. We come over to the rest of oil kind of moving around, not in concert with the E-mini, but still actually unchanged. Gold making a little bit of a push. I'm thinking we might have some movement in gold this week with the FOMC and all that stuff. Yeah, and then the copper is looking okay. They're actually moving up a little bit earlier, but we'll see if that one digs out. And let's come over and look at the currencies. The dollar, well, on Friday was up a little bit. Now up a little bit. So we'll see. Anytime that the treasuries are moving up, I've always got to be like, because it's something that is common, and the dollar, frankly. Something that is common is that these guys that are going to dump stocks, they're going to come in and hold on. These guys, if they want to dump stocks, they will usually come and hedge themselves with the treasuries and the dollar first. So sometimes it can be kind of a harbinger of something to come. But I don't think that that's what's going on in this case. I think that it's just a short-term supply-demand sort of a thing. Mark Gamestop, yeah, you think BB is the next GME? Also, thoughts on CCIV? So I don't know a whole lot about CCIV. I think that BlackBerry, I mean, I don't know. On BlackBerry, I feel like that the big trade is already over. So we know, I have a friend here I talk to regularly. He's been holding BlackBerry for years and just made a bundle off of it. As to whether or not there's more in it, I don't know. Here's the thing. I would be really careful about all of this. First of all, because the stop run sort of a thing is kind of dangerous. Like, if you get in early, there's definitely some big money to be made, especially if you leverage up with options. But, big but, probably 80% of the retail traders that trade these moves are going to lose money on them. Because what will happen is it will become harder and harder for them to push price up, because there is a square root law impact for meta orders. And if we consider all of the retail traders trying to squeeze out the shorts, one big meta order, then the larger that meta order gets, the the impact starts to trail off. And so you end up with more retail traders getting in at the top. And then when they decide to start selling, they start to have more impact again, and it will push it down. So this, just like Kodak is a perfect example. The vast majority of people lost money in Kodak, right? So my opinion on these, if you are trying to make a trade on being informed, so you know that there is a high short flow and that there's a very likely to have a lot of buying come in and squeeze them out. When you get your big move, get out, and don't hit yourself if you get out early. Okay, because the issue is that when it's over, the shorts are out and the retail traders start taking their profits, it will come back very, very quickly. All right. Blunt, I was long, BB early, then shorted, and the top went green for 10 seconds and got stopped. Oh, Joyce. Jeez. Well, I tell you what, I definitely want to watch GME today. Hopefully we can watch it here without it affecting the stream too much. Some Fidelity Active Trader Pros kind of does some funky stuff. I think that it hijacks the processor sometimes. But we'll see if we can watch it. I'm interested in the options because I have a price that I calculated the impact of the short sellers bailing, and that has given me a price that I believe that GME could go to. Interestingly enough, we probably hit that price pretty quickly. So, like, I don't know, man. The shit's crazy, right? Oh, what the heck is with this? So instead of showing Tesla, let's show GME. Oh man, it is already above my price in the pre-market. So I don't think that one is happening for me. Now, how do I get rid of this thing? Yeah, there we go. Okay. Din, 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 din. Dun, bum, bum, ba-da. Oh gosh, how do I? Come on. There we go. All right. And we scroll over to here. Okay, so GameStop already up over 100 in the pre-market. Oh my gosh. Well, that actually just increases the target, right? It's now at 103 FFS. I was willing to get in at 60, and this morning it looks like a pipe dream now. Well, yeah, I mean, here's the thing. Oh, you could certainly buy it, right? By the way, E-mini taking a little dip there. Just as that E-mini move came in, I was starting to hear stuff over the squawk about the UK's prime minister going up to Scotland and promoting against a separation vote or whatever. A Scottish exit. I don't know what they call that one. So it seems like the timing is right, but like as for why that would impact the market the way that it is, I'm not sure. If it was an impact from the market, I think it's probably something to fade, but we'll see, I guess. UK Prime Minister Johnson to visit Scotland to make an impassioned plea for Scots to reject narrow separatism. Yeah. Okay. So anyways, the thing is that I would really like to play this with options, right? But let's see here. I think I have the options thing down in here. I'm going to scroll all the way down. All right. So if we just look at, well, I don't know if we want to do the February one. Can we do? Oh, are there not weeklies for this one? Okay. So I guess then I guess then we come in here. Oh no, wait, this is the other one. Okay. We'll go into that one later. This is so funny that you've still got people buying strikes at like 2 and stuff. Like, okay. In GME. But now we're going to be getting up into like, well, okay, so it's not showing me anything past. So we'll have to see when it opens what we get on the options. Cuz I'm thinking if it's at 100 and I was to start going into like strikes at 120 and they were like, you know, single digit numbers, then maybe we could play it, but it looks to me like it's too rich for my blood. This isn't even the jump from the US 930 markets yet. This is about to skyrocket. Right. Yeah, it's going to open up and then then all the retail traders are going to buy it. It's nutso. And like I said, so the thing is that when I looked at the numbers, so I don't know how many of those people in the pre-market are the shorts. So if you look at the short interest, there is like 70 million in short interest on this thing, right? So if you factor in the impact of 70 million, and I don't know how accurate this calculation is, but I get somewhere around $21. So let's just say, for the sake of argument, because the overnight market is going to be really light, right? We open up at 100 and then there's the shorts still have to get squeezed out, and that's 120, 140, 150 maybe. Like, it could just run. So I'm going to bet you that these options, these far out, even the far out of the money options, are probably going to be really expensive. That's just so crazy, right? That whole thing is just really insane. Anyways, Vlad, nobody's going to short Apple before earnings. Yeah, I bet you. Is Apple today? Let's see here. We should come and look at the earnings schedule. Or let's see here. Wall Street Bets always has a really good one. Reddit.com/r/Wall Street Bets. Search earnings. Search the subreddit posts from the past week. Okay. Whew, so many. Okay, so today we've got a bunch of companies. Let's see here. When is Apple? Apple. Oh, Apple is Wednesday. Apple and Tesla are what? Oh boy. Oh boy. And the FOMC is Wednesday. That is too much shit for one day. Oh, I can't handle it. I can't handle it. How'd this all start? Well, so yeah. So here's the next thing that we need to consider with GameStop. Is that there has been a catalyst. So apparently they are shutting down stores and they've like taken on new management and have like a restructuring plan of some sort. So there was kind of a reason for the shorts to start getting squeezed, and it was like it was moving like crazy, right? But then what happened was the shorts stayed on. The shorts were like stubborn about it and started trying to like do all of this social media outreach to convince people to short it. So of course the Wall Street Bet guys are like, oh, so we should just keep buying it then and squeeze you out. So that's what I'm saying. And like the thing that's dangerous about this is that these retail traders, I don't believe intend on keeping their GameStop stock for years and years. I think that they want to squeeze out the shorts and then they're going to take their profits, right? And it'll be like a mad rush to see who takes the profits first. So like I said, again, I on this one, I would, for me, I'm not a financial advisor. I'm not giving you trading advice or telling you to take trades or anything, but I would be getting out early. Some people thinking it's going to 400? You gotta be kidding me. Wow. I mean, the thing is that I don't really know the financials and everything else, but I have a really hard time seeing how the stock is correctly valued at the price that it is right now, right? This is purely movement created off of trading. And it's likely to continue moving up until it's finished. And it's up to the shorts to decide how far that's going to be. But the reason I think that this is relevant is that there are a number of other stocks out there. There's a big list over on Zero Hedge. They did an article about it, and they had a list of the most shorted stocks. So one of them that I thought was really curious and just is kind of stuck in my head is Bed Bath & Beyond. Bed Bath & Beyond closed 50 stores. Okay, so would Bed Bath & Beyond be a good buy on the expectation that there's going to be some sort of short covering? Well, so first of all, I don't really like doing the stock hype, so I don't like going around and being like, oh, this is the next big mover and chasing from stock to stock and all that. It's just that this particular one, GME, is a historic happening. But so maybe Bed Bath & Beyond, just as a random example, yeah, maybe there could be a short covering rally in that one as well. But the question then becomes, why is that one going to be the one that everybody focuses on? Well, Gamestop had a couple of things going for it because it's a gaming and these are all kids, and I think that helps it. And then there was the catalyst, right? And so I think on these other ones, you've got to be watching for catalysts. So if you wanted to play that, I think that we would want to be sitting there with a Bloomberg terminal or Twitter and watching these stocks and looking for catalysts that could potentially cause shorts to stop out. Right? And I bet you there was probably a lot of people buying all sorts of short stocks. And I mean, a lot of the rally in the market has been from washing out shorts. There's all sorts of crazy stuff about this. I think one of the things that seems to be going on is that people have figured out that they can increase their impact using options trading. So like I said, it's normally like a draw picture. Impact is normally like this. I talked about this in a TikTok I did yesterday, right? This is, as time goes on and the size of the meta order increases, it follows a square root rule. It's the square root of, that's not going to work. The square root of Q, which is the size of the order, over V, which is the amount of volume traded during the time frame. So say that day, right? But then, so the whole thing is that orders in the same direction essentially start to have less and less impact, right? But then if you start getting orders the opposite way, then the impact is increased. So say you just buy and then you wait, right? Then you're going to get something like this, right? And then you would be waiting for the thing that you expect to happen, right? That's going to push it open. That's going to push it higher. Right? But what if this point right here is going to be when the shorts are all out? Then what's going to happen instead is you guys are all going to get out and it's going to go like this. It's going to end badly. And since 80% of you got in up here, you're going to lose money. Like, this is just pure numbers from it, right? And then, yeah. Why was I getting into that again? Oh, anyways. Oh, so I think what they're finding is that if you do stocks, maybe your impact is like this, but if you do options, your impact is like this. So then when you sell, it's like that, and you still make money. So I think what's going on. And the reason for that is because when you are doing the options and all of the regulations and stuff, we're doing mark to market. So there's this execution cost bit right here that the options don't factor in. So they're able to take advantage of that and increase their impact on the stock, is what I think is going on. So yeah, let's make sure this is up here so we can keep an eye on GME. I'm going to put, well, what should we do? I'm going to move it over here. I don't really need to watch cold, so we will do MSTR is the one that I want to watch. So should I go into MSTR here for you guys? MSTR is a stock. These are the guys that have been buying Bitcoin. That they said that they bought like another $10 million late last week when it came down. So it's like a failing tech company, and this guy has basically turned his company into a glorified Bitcoin ETF, if you can believe that. And let's see here. Can I get this to zoom? There we go. Okay. Basically turned it into a Bitcoin ETF. So like, check out this chart, man. Like it's up at 620. And if you look at it over the longer term time frame, you know, year to date it's insane. It's absolutely insane. Right? So it turns out then that if we want to short Bitcoin, this becomes a good proxy to do it. So I'm keeping an eye on this guy, and I want to pull up the options chain for him. And yeah, you know what? If I like the prices, you know, I don't have a whole lot of money to put into a risk play at the moment. I'm saving it all for the futures account. But if we can get cheap options, maybe we will buy puts in that one. Making videos about people getting excited on GME, right? It's just like, well, when I was thinking this through, this is actually exactly what I thought. Like, so yesterday I went and I said, okay, let's use all of the new stuff that I've learned to try and measure the impact of the shorts covering. And I went in and I did the calculation. I was not planning on telling you. I was planning on being sly about it. Do you see there in the background? Do you see the number? Do you see the number right there? The 85? That was my price. It's already above 85, so I can tell you now, because it doesn't matter. Yeah, it was around 135 in the overnight, yeah. Anyways, so I did all that calculation, and I pulled up the options and looked at what at least traded on Friday, and I was like, well, I don't know if I'll be able to even buy options. It looks like there would just be so many people chasing. So then I had a dream that I went to sleep, and in the overnight action, they opened up well above my 85. And what do you know? That's exactly what's going on. There's a lot of numbers back there because I did the whole calculation. You say that the VWAP squeeze points out on February 6th. Well, I think that for now it's best for me to just keep an eye on MSTR, because it probably isn't the time. It really probably isn't the time for showing that yet, because, oh my gosh, how do I get rid of this? Hold on, I want to get rid of this little thing down at the bottom. Hide volume, hide tabs. Or maybe it's just down here. They don't believe in trend higher, but keep averaging. That drives NQ up all the time. Hold on a second. Hide tabs, hide volume. I know that there's a way to get rid of it because I've gotten rid of it before, but I can't find it. This is bothering me. It's like really bothers me now that I can't see it. Well, whatever. So what was I saying? Oh, on Bitcoin, I'm not so sure that today would be the best time to do it. So first of all, like MSTR is moving up right now, right? Like I'm sure. Well, let's look at what Bitcoin's doing this morning. Oh my gosh, did Jay take all of those fucking trades? Holy shit. Wow. I mean, I knew that Jay took a lot of trades and everything, but I didn't think it was that crazy. It is trading on almost fucking everything. Well, let's just let it do its thing for the day. Yeah. I haven't talked about Jay. We were looking for Bitcoin. Let me finish the thoughts on Bitcoin first. Okay, so yeah, they're up a little bit again today. I'm sure that Bitcoin's going to try and make another move up. And like Federal Reserve meetings tend to impact them, right? So we should wait until after Wednesday. Okay, Jay, let me explain Jay. Gosh. That is so weird. So Jay is a robot that is intended to be an HFT, a high frequency trading robot of sorts. It's not hyper HFT, but part of the strategy was that it took a lot of trades. And I went and I did the back testing and everything, and it was over the past 4 years, it was quite profitable. It takes big hits. It takes big hits when the volatility comes in. But, you know, I added a little bit of risk management to it and everything, and it was working out. So, yeah. It looks to me like it's just too sensitive. And it's not letting them run. So I never tested that, but we should check that out. We should see what it does if we let them run. Man, there's a lot of people coming in on GME, right? Anyways, I can change the sensitivity of J. So let's let it run that way for a couple of days. And then, you know, I'm just going to have to turn off the orders, showing the orders on this chart here. Data series, one range, we're just gonna have to turn off. Oh, where is it? There we go. Plot executions do not plot. Okay, so that we can see that. But I think that I will go back and make some changes to him, after running it for a day or two, especially if he stops out 2 days in a row. So we'll see. Okay, so back on GME, man. Well, we'll have to go through this a couple of times. It's okay. So let's just pull that down first. Okay, I'm going to make some room here. So remember the fifth. No. When you guys have the square root law impact of meta orders, is there's a coefficient, I'm just going to call it C, times the square root of Q over V. This is how large funds determine their impact on the market. They know what the coefficient is based off of past experience, and then they look at how much they're looking to trade and what the average volume has been over the time, over the past 5 days or whatever, and that's what they use to determine their impact. And then they go in and they say, okay, if we start trading this, it's going to move the stock up X much, right? Equals price change. Okay. So what does that look like when you graph it? I will use a little bit darker here. Oh, that's not going to work at all. Let's just use black. You're going to get this. Okay. This is the square root law impact of meta orders. Right? So here's the deal. Where are we on GME? Well, I suspect that we're right here. But I don't really know. I went in and I calculated the impact and it was $20. So in this case, I believe that it's 21.50. Now at this time, we don't know how many of those short sellers that were still short on Saturday that are still long, how many of these guys are still short from Friday and haven't closed yet. We'll get a good idea today at the end of the day where we're at, right? But the issue is that because of the square root law impact of meta orders, something like this area right here is like 80% of all trades in a bubble, right? And then when you start selling, your impact is going to be greater because it's the other direction, right? So if it keeps going in the same direction, the impact becomes less and less and less and less, and then you get orders the other way, those orders are going to be more impact, right? You're going to lose money. This is what it's going to do. This is why you can't just, as a big player, you can't just come in and buy a ton of it to make the stock move up and then turn around and sell that same. Because if you have enough impact to have it on the market, then a large order signed in the other direction is just going to push it down, and you're going to lose money on the execution impact of your trade. Makes sense? So like as a retail trader, we typically don't think about this because it's like we do one lot. But now what you're getting is large groups of traders all following in on something on like Wall Street Bets or similar. Now you kind of have to think about this, right? And for you, the goal is you want to be in early and you want to be out early. Okay? You ever see these things where people say like, oh, okay, here's a move, and then it comes down and makes a lower low, and at this point right here, you want to go short, right? You'll like wait for it to peak, and then you go short. That will not work in this instance. That's my recommendation to you. So if you are in GME I don't think that I'm going to be able to get in. But if I were in GME, I would be looking to take my profits early. You're on Lightspeed demo. Not too familiar with that platform. I recently, apparently Iron Bean Capital has a new platform, and I'm going to take a look at that. Always love looking at new platforms. Anyways, if you happen to catch this thing, guys, right here, get out here. When you see that people are still buying and the price impact isn't as high, get out. Answer the question. Oh, good morning, John. By the way, John, I was well. I don't know how I ask you this without like exposing the thing, but you showed me that play that you had made the other day. Did you take profits on that at all? And there's Ace. Good morning, Ace. I'm gonna erase all that. Come back over here and look at our trades, our stuff. Oh, do we have? Oh, what was the? Oh, did I minimize it? Yeah, I minimized it. How do I? How do I unminimize stuff? Where does it go to? Go all the way down here? Oh my gosh. So what's the play? So going back, we're gonna have to change this. Okay, so here's GME. We're watching GME and MSTR. Okay. Okay. Cool. So the thing here is, if you are already in GameStop, then good for you. I would hold it. If you're not in GameStop, I do believe that there could be further upside to this. Like I said, if it turns back down, it'll be very, very quick. So we would have to be nimble. Okay. I wouldn't be buying like too much. You know, if you're buying a couple $1 million worth of GameStop stock, then you should really consider the execution impact of your trades, right? But I'm thinking that what is going to happen is it's just going to move too quickly for us to really have any good entry on this. So let's come down. Let's just make sure that I've got my options chain. Okay, I do. And we will change that to GME. So when we get the open, we'll come and look at it, all right? In fact, why not just move this up here? Can if I make this thinner, is that okay? Nah. I don't know. Okay. Can we get away with GME being that small? I guess we can. What do you guys think about that? You think we can see with that way? Okay. Also, since this is going to be moving so fast, I think that we should change it to just be 10 strikes. Oh, 10 strikes is not enough. 20 strikes. Okay. Oh, we do get weeklies. Okay. We get weeklies on this one at least. See, look at this. 75. Like 75 was what I would buy. 19. So next thing. Oh, I almost forgot this. But this is really important if you're even thinking about playing GameStop. There is a really high probability that the SEC is going to stop it. And what I mean by stop it is like they're going to halt the stock and investigate things before they allow it to continue trading. I think that is a reasonably high probability of happening. Oh, you can take, well, you know what? I actually like it long right here too. I'll take it. So I think that what is going to happen is that there's going to be like a mad dash to buy as many options as they can right off of the open. And like I said, I see the impact being $20, but as retail keeps pushing it up, who knows? Okay. It'll go like that for like a minute and it will hit the circuit breaker and they will halt it. So it's going to be a real zoo, I'm sure. Okay, let's zoom in here a bit. Yeah, that's better. Make sure that I've got the chart all the way over. Do you trade journal your trades? Well, I mean, all of my trading gets saved. I mean, not only do I have the video, but then I have the journalytics, and that's how I do it. I can already imagine the amount of TikTok millionaires. Well, it's like, man, yeah. The thing is, I typically do futures. For those of you guys that are new today, you realize that what we do here is usually focusing on futures and what the S&P 500 is going to do today, and what treasuries are going to do today. But this GameStop thing has turned into such a monster. I just can't help but watch it. So yeah, we're going to get a ton of people watching it today. Oh yeah, normally we don't hit 50 viewers until like 7:30. So this is going to be crazy. This is going to be crazy. But I think that for the options here, as much as I would really like to get in on it, I would only be willing to buy an option if it was like $1. Maybe some sort of spread. Maybe I could do a spread of some sort, but I'm thinking that I may just be on the sidelines for this one. Because there's no way that we're going to be able to catch this. Like it's going to be like it's going to go, and then it will get halted like almost immediately. Okay, which CPR are you using? I'm about to pull a trigger on a new one. Well, so if you're getting a new one, you kind of got two options right now. I would either get a 3600. I would get the AMD, but you can either get a 3600 or a 5600. The new one is the 5600. Have you read The Unknown Market? Not yet. It's on the list. I finished this weekend. I finished my market microstructure book. Whew. So yeah. So the 5600 is about $300, and that is definitely like, if I was really buying a new machine and I was trying to future-proof myself, I would probably get a 5600, right? But you can get these 3600s for like $120, $150, whatever. Like, that's a great deal too. So if you're trying to go economy, you could get the 3600 and you would be you would be in a great spot, right? I really want to know what's coming for their Threadrippers. I don't think that they've released them yet, but it's coming soon. I know you run strategies and kind of use it for production, so I wasn't sure the 5600X was enough. I can get it for like USD 240. Oh, that sounds like a really good deal. Oh, I think you'd have to go for that. Yeah. Well, I mean, the whole thing is I use on my 1700X. Okay, so remember that the 600 tends to be the optimal performance price ratio, right? 57 or 700 is the nicer one, and then 8s and 9s are like crazy. Oh my gosh, how did you afford such an expensive CPU, right? So here I have the first generation of Ryzen processor, 1700, and it's still going strong. I'm only using 60% of CPU, and at the moment I have Fidelity open, and I've got a bunch of robots going, and I'm the crazy stuff. So it does not look like J is doing very well. I will go back today and I will back test its trades over the past day and see what it does. I am a little... Oh, you know what? I wonder... Well, let's just disable the MES one. Strategy. Tick replays on 5 days loaded of data. I don't know. It's kind of weird. Wait, has it taken any good ones actually? Let's see. If we just come in strategy performance, real time. Okay. So that's not right at all. It's taken 20 trades and it's hitting 30%. That's not what it should be. So I think that this robot, there's got to be some errors. There's got to be some issues with my code. Something that I'm not considering. I'm not sure what it is. Maybe well, I don't know. It is using one range. It's using a one range chart. I wonder if it has something to do with that. I have to look. We'll have to look. Oh, let's get rid of this. GME is 100. Yes, I see it. It's on the screen in front of me. Yeah, that robot is taking an imbalanced risk reward, so it should be winning like almost 60% of the time. So them stats, that's not what we're supposed to be getting. So I'm going to take a look at it after the stream today, but it looks to me like it is not trading on simulated data the way that it was trading in the backtest. Your next robot should be. What is it with you and Travis? I called it Jay after Jay Gatsby, because so the whole point of that robot is to oh, maybe I just shouldn't do it on. Maybe I could try testing it on second bars or something. Anyways, the point of it is that it will take on a lot of risk. So it should do really well a lot, but then it should have these periods where it will just get destroyed, to kind of show how some of these people will pass combines, but then after they get the combine, they'll blow up. So that's why I called it Jay Gatsby, because I don't necessarily expect it to end well. Excuse me. Oh man, I need to go. I haven't gone sledding this year, but you know what? With the baby and everything, I don't know if that. is really a great idea. So he's not big enough yet. Next year. So I wonder here if Fidelity will not give me any options data until... Oh, man. And look at the daily volume on this thing. Look at the daily volume on this thing. What did you learn from the book? Well, there's so many things that I learned from the book that I can't even begin. But I think the biggest takeaway for me was the square root law of meta order impact, which I've explained 20 times today, but I will explain again because I love talking about it. If you are a trader and you're trading a large order, your impact of your orders is like it follows a square root law, which means that the larger your order, the less that the increase in the number of lots in your order matters. So it's something like you would think like 1 million shares is a lot, then 2 million shares would be like twice as much, but it turns out that it's not. And that's why stocks move the way that they do. That's why you tend to get expansion patterns, because if somebody gets in on something, like that, they have that impact, and then they decide to take their profits, it's going to go like this. Right? Which means that you can't make money just from the impact of your execution. Something else has to happen, moving it up. Something else has to happen beyond just the impact of your order, right? So what does that result in? If they just kept doing that over and over again, you'd get something like that, right? Or, if you just get in and then you stop and you wait, your impact is going to be like that. There's going to be this regime change afterwards where it slows down, right? And then maybe somebody else comes in and goes, and that's their impact, right? So then what would that make? This is why stocks move the way that they do. So once I started factoring all of that stuff in, it kind of changed a little bit about what I want to look for in the order flow and so forth, because now I have like a better idea of like what the flow should look like. Buy at the open or wait for the dip on GME. Oh man, you know what, man, I think I'm starting to feel that the play is already past. We'll see what happens. But it looks at the moment like this is too rich for my blood. I mean, man, if I can trade at like 75, look at that. They're already asking, they were already asking 1940 last that it saw. This is just going to go crazy. And look at the volume in the pre-market. Like they've already traded 11 million shares in the pre-market. So let's see here. I'm looking for it to trade around 150 million shares today, and they've already done 11 million. Can you believe that? Like, this is insane. Like, I quite frankly do not think that I am nimble enough and have enough of a buffer and everything to really play this. And if you're gonna trade GME, you've really got to consider if you do too, right? Now, certainly if GME pulled back, that would be one thing. I think that there will probably be such a big rush at the beginning. Maybe we will be able to catch a pullback. We'll see. Anyways, so I have some books. I think, there was somebody gave me one book that had more to do with like the history of funds and stuff like that, which is something I'm interested in. So I think I might read that to get a bit of a break. But then I really want to get into hidden Markov models, What will you look for in the flow because of that? Well, so I think that what happens to me oftentimes, if we go back to this curve here, is that by the time I realize what's going on, it's like right here. And so what happens is I get in, and then you get this thing. Or they take their profits, and it goes like that, right? So I'm noticing the flow right there. But really what we should be doing is understanding, like, what are the dynamics that's going to cause them to want to get in, and then how do they execute that, and then look for how they execute that. And the way that they execute that is they don't do it all at once. They kind of do it on a schedule. So I'm going to be looking for, some indication that they are going to make the trade that I think that they're going to, and I'm going to try and get in a spot when it's quite calm, right? And then when it's starting to get crazy, and everybody else is jumping in, then I can get out. And that's kind of the difference. I already kind of had something like that in my robots, so it's just now I can kind of like calculate the impact. So like this guy right here, Joseph is explicitly looking for longs only in a place where he's getting a good spot where it's come back and it's calm, on the anticipation that the next wave of the meta orders are going to come in and keep pushing it up. And then I can take in a really good risk reward. So looks like, so let's see here. If J takes another loser, I believe, wow, that just dumped a lot of stuff in the log. Okay. I believe that if he stops out again, that he should stop trading. So we'll see if that part works. It looks like he's stopped drawing boobies and is leaning more towards shark fins now. Yeah. It's all about the shark fins, man. It's all about the shark fins. I wish I had more screen real estate. I need to draw on my own face. That's what I need to do. I don't think I can do that. I am craving cave. There, look, we'll do it this way. I know what we can do. We can go into paint.net and we'll make something that's maybe like 300 by 300. by 300. Okay, and new layer, delete. Well, I will draw it first. And then we will draw with the paintbrush. We'll make it maybe 5 pixels and make sure, okay, we'll do yellow. We'll do yellow, and it's going to be like, and then GME, and this is C square root Q over V. And then let's see here. Can I do the object bit and outline object? Will it work? Let's see if I do black. Nope, it doesn't catch it. That's unfortunate. Okay, but oh, did I draw it on the background? God damn it. Okay, okay, let's try this again. Mm-mm-mm. There you go. How's that look? Okay, file. Save as. Oh no, wait, cancel. Cancel. Gotta turn off the background now. Okay, file. Save as. PNG, and we'll go into pictures, and we will title it GME dot. No, we'll call it price impact. No space. Impact. .png. Save. Okay. That in. Close that. And then we will add an image. Create new. Price impact. Okay. Image source. Pictures. This one. Open. Okay. Aha. Aha. Maybe make it just a little bit smaller. So it'll fit right there. Okay. Hey, can you see it? Can you see it? Yeah, there we go. There we go. That was fun. That worked out better than I thought. Buy now or wait till open, man. If you can catch it, then hey, have fun. The issue that I have at this point, because they are higher than my target price, I have no way of calculating what the remaining short interest is. I don't really know where it can go to. There is so much hype over this stock. I really don't think there is any limit to how high it can go today. But just realize that this is a hype move. You're going to have to be nimble. If you catch something with it, you take your wins. You know? How did you do that, Freak? I just added an image. I just added an image in OBS. 200. I mean, man. The target that I calculated off of the stopping out was 85. And they're already well above that. So there's probably no limit to this going. The question though is what kind of volatility are you actually going to get on the open here, right? I mean, I think there's if a lot of people just come in and market buy on the open, then I think we might get a good pullback. So for me, I'm not going to tell you anything to do, but for me, I'm maybe going to wait for a pullback. But that's also that for me, I'm not really willing to put a lot of risk on this thing. So, you know, if they give me really cheap options at a price that I think is good, you know, like if I was able to get cheap options at 75, then maybe it would be worth playing. But I don't. I would be really cautious, guys. Like if you have a good platform, then go for it. I don't feel confident playing something that fast with my Fidelity platform here. If I was doing it on Jigsaw and I had my DOM in front of me, then I would feel a lot better about it, you know? So I don't have it. This doesn't really have a DOM, does it? Multi-trade. Nope. I think there's one in here somewhere, but it's not. I don't know where it is. But I don't think that it shows me like the depth and everything. That's the other thing is I think even with the amount of attention that it's getting, I don't think that the spread on it is super good. So does anyone here use dedicated servers? So I haven't tried that. I got, you know, this robot that I've got running that is just failing hardcore today. Oh, actually, he made a winner, so I don't know. He made a winner, and now he's got a loser coming in. That's funny. But I was looking at that, and I was like, well, this one I think I would need to put in a server. So there is a good service that the Futures IO board has an association with, and that is speedyservers.net. So maybe check that out. Okay, here they go. Is that not going to... Oh my, is that the children? Hold on a moment. So I'm wondering here. So my data, well, I do have my settings set to not update very much. Oh, by the way, I got my winner there, didn't I? Yep. Yep. Happy about that one. And I'll let them sort things out a little bit longer here. But anyways, I did have, oh geez, where was it? General. Okay, 5 seconds. Let's go to 2 seconds. Okay, so they're at 100 right now. Yeah, the data feed may just be going slow, but it kind of looks to me like all of mine are being kind of... Was it halted almost immediately? Wait, let's see here. Check to TweetDeck. Oh, you know, I haven't heard anything from my news squad this morning. I should double check that here. Okay. The call wall shifts to 3,900 in SPX. Well, I'm not seeing anything on Twitter yet about it being halted. It looks to me like my fidelity may just be slow here. Let's see if I changed my update to streaming. What I get. Because see, I'm not even getting... It's not even showing data come through now. What if I come back over into here? Puts. Man, you really got to go out. I have to go like all strikes to do this one. Okay, but I can... Well, man, the $5, $4 spread. And look, some of these guys are asking 10 for them. Man. Well, I guess on this one I could, well, even on there, I guess I could try the 200s. Well, let's just wait and let that one, we'll let that one play out. Okay, I'm getting some updates now. I'm still not seeing anything on Twitter. I am getting data. It is just GME is just stopped. Check that nice. I didn't. If you posted a link, it's not going to show it to me unless you're a moderator. Let's see if I can find it on my own. Trader updates, maybe? Nicey trading halts. There we go. Yep, there it is. It is on. What does LULD pause mean? Oh, limit up, limit down. Gotcha. So it's already. So it was immediately halted, just like we thought. At 100. 5-minute halt. Okay, so if it did it at exactly 9:34:20, then we should be waiting for another so at 39, so in another 3 minutes. You're showing it halted at 87.80. Oh really? See, like, this is so funny is that the fidelity is not really showing me any data at all. Oh, look at that. Maybe now I get it. Maybe I need to do this. There we go. Okay, you're right. 87.80. So it looks like they bought and then immediately it got badushed. Yeah, well, the options chain is definitely like nada. Okay, well, let's come over here and check out MSTR. Looks like Goldman coming back a little bit there. They're back up to 600. See, the other thing is that, like, I would rather go into March, I think. No, not April. Let's try March. See, the spread on it is just too high. Not sure I can play that. Well, wow, so it's almost $100 for a put. So is it safe to assume that there's no fundamental reason GME is rock shipping up? It's one of those Wall Street bet chads fucking the options market kind of stuff. Well, I think we can make it a little bit more sophisticated than that, right? The reason that GME is moving is based on order flow and positioning and not necessarily fundamentals. I think that the fundamental catalyst has already come in and done its thing, but at this point it has become its own beast, yes. GE sells 735 million in Baker Hughes shares. It's pretty crazy. Okay, so we should be getting going again, right? It was halted. GME was halted. I don't know why I'm not seeing it on. Oh, okay. I saw it for one minute ago. Zero Hedge finally tweeted about it. GME halted on volatility. Ace took a... Did you take a second trade? I'm kind of starting to think, hey, maybe I should just get out. Maybe I should just take the one winner that I got off of the micros here and be done with it. I think it's more complicated than just a bunch of teenagers hyping it on Robinhood and Reddit. There is a short seller. There is a number of short sellers stuck in this thing that have to get out. Oh, really? Wait, how? That doesn't make sense. Oh, you. I see. You let it run. I get you. You let it run and finally got out of it. Okay. See, I just took the 16 tick winner. But let's see here. Let's analyze. If I had been paying attention to it, would I have maybe tried getting out a different area? So I got 42. It definitely went up quite a bit further than that. Actually, almost another 16 ticks, right? 42 would have been 46. Yeah. So we could have gotten another 16 ticks on it. And it does look like there's a profile forming in here, and it's still there right now. So maybe 46 would have been a prudent area to get out, but I didn't want to really like sit and focus on it. It looks like maybe they started trading again here. Yeah, so let's come in here in settings. What is it? Candlestick? I don't know. Oh, you got hit hard. Yeah, okay. Capital is up 12% since last Tuesday, and it's up 4% today. Wow. Okay, now I'm getting data on GME again. Holy crazy shit. Okay, let's see what we can see on the options now. Okay. Oh my gosh. So even for like 15 points out, they're still asking $20 for GME bids. That's freaking hilarious. Wait, so now I really do need to just show all strikes. Oh, they're not have any strikes above 115. Surely somebody's buying like 120 calls. Come on. Looks like they're buying it again, man. Put that down there. Make sure they were like down back at the top. Okay. The volume is going. Look at it go. You know what just happened there was all of the retail traders on Robinhood finally figured out that it's open again and they're clicking hard. Well, that is pretty crazy how volatile it is there. Look at the volume go there. Oh my. This is why I trade futures. Hey, look at that. It's just the volume is just going and going and going. And by the way, just from the opening move, from just the opening, it's a 50% almost winner. Like, this is so crazy, man. Yeah, I bet. User reports indicate Robinhood is having problems since 9:41 a.m. Eastern Standard Time. Listen, guys, so I know that I've got a couple of new people in here. Wow, we're almost to 139 concurrent viewers. Wow. So if you guys are in stocks and you want to day trade stocks, I personally, I think that futures is a better instrument for day trading. But if you insist on doing stocks, I would recommend getting off of Robinhood. They are selling your order flow. I don't think it's a very good platform. Thank you for doing this. I do this every day, so it's funny. Usually we get around 50 people, but I kind of expect, I was like, well, we'll take advantage of this GME thing. Because normally we trade bonds. You see this one right here? I'll show you. This right here is what I like to trade. But bonds have been kind of sleepy lately. But do you see here? Look at the liquidity on that. So this is the market depth of market, rather. And it's showing me all of the limit buys and all of the limit sells. And you can see there are 5,000 limit sells at 0.5 halves. Oh, somebody just hit them really hard there. But look, it held. It is really hard to get the 10-year Treasury to go even one tick up or down. Now, for a day trader, there are some advantages to that because it gives you time to think about it and get a good spot and click in and all that sort of a thing, right? But a lot of people, it's slow. And then you compare that to what is going on over here in GME, like, holy crap. This is just crazy, right? Listen, bro, I'm too broke for TD Ameritrade. Weeble is what I got. Well, the funny thing is the only reason that I'm using TD Ameritrade, or sorry, for Fidelity. I'm using Fidelity. I don't have, Thinkorswim is a great platform and all, but the reason I'm using Fidelity is because when I worked for Goldman Sachs, they gifted all of the employees $1,000 in stock, and they gave it to us in a trading account on Fidelity. And so I've just continued using that account. Have you ever seen something like GME before? I have certainly seen some insane moves. I think the craziest thing that I saw back in my day, when I first started watching markets back in 2008, there was one day or a week or so where all of the investors realized that AIG had actually recovered. So remember, AIG was like the center point. So that was the one that was going to go down, and they're like, well, we can't let AIG go down, so we have to bail them out. So they got bailed out, and the stock market just kind of left it alone. And then several months later, it turned out that, they kept working and that they recovered their losses and that it was worth something. And so it went like 10 times in value in like 2 days. And I watched that, and I would trade it on Sim. And I remember this one time. Yeah, there was this chart, and it was like this. And then somebody dumped and went like this, and then it was like that. And I bought it here, and I sold it here. And I was like, okay, you know what? I don't think I'm as good at this as I think, because I had no clue that was going to happen, and I just happened to get out, And that was the craziest thing that I ever watched. But this short covering that we're getting and the interest in it, I've never seen anything even remotely close to this. This is just absolutely crazy. And the thing that I think is so insane is, if you look at this formula that I got right here, this is the square root law for market impact. So this is if we know how many lots we're going to trade, and we know the average daily volume, and we know the coefficient for that stock, then we can calculate what the impact will be from our orders. So we can look at this, and we can make this Q be the 70,000 people that have to cover their shorts, and V be the daily volume. And then we have to figure out C. So what I did for C was I looked at the options open interest and used that as a proxy. So it's probably not very accurate, but I did the calculation. And when I did the calculation, it came out that it was going to be about $21 move. But then, like, we're already well past $21 in the overnight session, right? Like, that's just how many people are coming in. So this truly is crazy. Business Insider is reporting GameStop skyrockets 55% as Reddit-fueled rally enters third week. Well, yeah. And it was, the funny thing is that it wasn't until Friday that I really started seeing everybody jump in and say stuff, right? Now, for those of you guys that just stopped in, this chart, the reason I put it in front so I could explain this to you guys, because we keep explaining it, right? This is what this is what the graph of this function looks like as Q increases. So as the meta order gets larger and larger and larger, the impact is less and less and less, right? So what you got to be careful about is that the majority of you are going to get up in here. Where are we at? The majority of you are going to get up in here, right? And then when all the shorts are squeezed out and you start selling, taking profits, then the sign changes and your orders start having a greater impact again because it's in the opposite direction, right? And it'll go lower. So the thing that I've been sharing with you guys today, I'm not trading it. I have a position. It doesn't look like there's any way for me to get in on this in a reasonable way, but I would take my profits early, because if the longs take profits, it's going to fall very quickly. I'm feeling for the people still in this is a noob death trap. Yeah. Well, I mean, it's trading right now, so like personally, if I had gotten in on Friday and I got that 50%, I mean, at the moment, I kind of got the feeling that they're going to keep going. But, you know, if I had already baked in that much profit, I would just, especially with options, I would just be done. You know what I mean? How much is it tick? I don't know. That's a good question. So, Sugar Daddy, in a stock like GME, it's probably a little bit more complicated than that, because if we look at the 10-year Treasury here, which is like the most liquid instrument in the world, there are thousands of orders at every price, right? But for most stocks, that is not the case. The liquidity is a lot lighter. And even though you will see, a good number of orders at a specific price, you might have several prices that don't have any orders at them. And there's often a spread. There's often, a gulf between that best bid and best ask that is multiple ticks. And so the minimum tick doesn't matter so much as it is the spread, or what is the average difference between the best bid and best ask. You got in at $13. Wow. But you just bought shares, yeah? Yeah, but you wanted to check out 50%. Yeah, it's just that's kind of where I'm at. Oh yeah, we got our new video. Yeah, so you guys want to talk about the new video a little bit? I mean, there's not too much, but I do a lot of back testing, and there's a strategy that we've been using lately that I have found to be very effective in this market. So normally when I do the back testing, it's like, here's this technical analysis thing that everybody's watching, and it doesn't work. But this one is something that we found, and it actually over the time frame, it is a positive back test. So it's geared towards this market, so I can't guarantee that this market will always continue forever. But, if it continues, or maybe sometime down the road, this kind of a market comes back, that indicator that I'm talking about in that video gives you a really good way to try and take advantage of it. Something that helps and would really complement anything else that you're looking at. Yeah. What's a tick? So a tick can mean a couple of things. So on my platform here in NinjaTrader, you can do like a tick chart, and a one tick is basically an order or like a change. Like any one change, one new piece of data is a tick. Okay, but what people probably mean more is the minimum price fluctuation. So in the 10-year Treasury, the tick size is 1/2 of 1/16 of a handle. That's why it goes 04.5, 05, 05.5, 06. And then you'll see, you come down here, 31, 31.5, and then it goes back to 0 because I said 1/16. It's 1/32. but then it's 1/2 of 1/32, right?
Block
And
high.
the ZB, the minimum tick size is 1/32, right? But then there is the tick value. So in the 10-year Treasury, one tick is worth $15.0625, something like that, right? So if I were to buy at 06.5 and then I were to get out at 07, I'd make $15, right? And that's, you made a tick. So what he's asking me is, what is the minimum amount that GME can move? Well, regulations stipulate that it has to be 1 cent. They forced everything to be rounded to the nearest cent. It used to be that you could trade like 1/8 of a cent, and I actually think that that was smart and that they should go back to that. But that's where I was getting at, that over there it's a little bit different, because there's not going to be liquidity at every price in a stock. There's going to be, very uneven liquidity at a bunch of different prices, and there's going to be a spread between that best bid and best ask, especially in a stock as volatile as GME right now, because what happens is that the market makers that are, providing liquidity for that instrument are going to see that there's so much volatility that they have to increase their spread in order to still break even with all of that volatility. So yeah, that's where I was getting at. There you go. Tick size is the minimum price movement of a trading instrument. I know, right, Gary? So I got a question for you, Gary. Actually, I was waiting for you to come in, because I just was looking at options all last night, because I did some calculations on GME. They've moved up in the overnight session way further than my prediction, but I was trying to predict what was the price impact of all of the short sellers buying, and I got 85. So I was looking in here and all that. But then I found a proxy to short Bitcoin. So if you're a really big Bitcoin fan, you might not necessarily want to listen, but we have a model. It's in the video description, where I post every other day on Patreon. And it's $5 a month, I believe, to get the updates like that day. And then a week later, you can go and look at the post for free. So you can go back and see what I've been saying about Bitcoin for the last 3 years. And this model is effective at predicting short-term tops and bottoms. So I've been looking for a way to short Bitcoin, because the model basically says that it's over and that Bitcoin should start declining from here. And I just couldn't find anything until I heard about this MSTR. So apparently MSTR, there's a tech company, and they've been buying Bitcoin. Like the other day, they bought $10 million worth of Bitcoin. So I'm like, oh, hey. And if you look at this thing on a 1-year basis, look at that chart. Do you see down in the lower right? That is just insane, right? They used to be worth only $100 the beginning of the year, and now they're worth $600. And these guys own a ton of Bitcoin. So yeah, if there's a collapse in Bitcoin, these guys are it's bad for them, right? So I'm thinking, hey, this might be a good proxy to short. I don't know if now is the right time for the short, but I'm thinking maybe I could go short MSTR with puts, So now I'm coming over here. If I go MSTR, okay. So if we go to at the current strike, it's $115. And then you got to add 2 zeros on top of that, right? So that's $11,000 to go short with puts at the current strike price. Too rich for me. You know what? Sometimes I have my good moments and my bad moments. I don't necessarily claim to be make money all the time. And I don't have a huge account, and I cannot afford $11,000 on one trade. No way. So then I'm looking at it and I'm like, well, if I go far out enough, the thing that's crazy is if they go down, it's going to go down to $65 or something like that, right? So I suppose that, buying puts way crazy out of the money puts isn't necessarily, it could work out. But man, like that's like way too far out, Like the crazy thing is that you're taking a short essentially, where to make any money off of, tape expiration rather, you've got to be like, geez, you know what I mean? Like it is way far outside of what the options are pricing as a probable price to hit, right? So I guess that's good in that if we really believe in our model that it's really just going to completely collapse. But then I look at it and I'm like, yes, but if I want to buy one right now, I need $10. Fuck that. No thanks. Did you see somebody just put 10 at all those prices? No. Maybe if I could get it for $1, maybe I should just put out a bid and see if anybody decides to hit me. But I don't think today is the day to do it, because like there's a lot of stuff going on this week, right? We got FOMC on Wednesday is a big one. You think that it's not going to go under 20K? Well, so the issue is that it's all speculation, right? Read the prospectus carefully on that MSTR. Well, I could go and look at it. But we're talking about shorting it, right? It looks to me like it's a failing tech company. Your numbers are confusing me. I don't think that bots keeps track of what the average price of Bitcoin is. Where we're at? We're at like 3,300 today. 34,480. Right? So when I look at I have to go and look at my latest post on Patreon, but I think that I have the bottom somewhere around 10. So if we have a complete speculative bubble collapse, it could go to 10. But it looks to me like even though they've kind of hit like that wall where there's just they can never seem to go higher than this certain level based on my valuation. Even though they've already hit that, like it's come back and it's acting fairly lackadaisically. I don't know. It's kind of funny because the last, what was it, like Thursday? I think it was like Wednesday and Thursday. It looked really ugly in Bitcoin. But when I'm looking at the chart, I'm like, it's down like, it gave up like X% of the gains off of the week before that. Is that really a big deal? Yeah. When BlackRock has blockchain set up, Bitcoin is over. Well, so this is the interesting stuff. I mean, you have a good comment, but I think it's a little bit, the thing you're always going to hear me say is I think it's a little bit more complicated than that. So here's the thing. Blockchain technology, is absolutely coming. And all of these banks have some form of blockchain technology coming out, and they're all going to be using it. So, if you're using Bitcoin as an effective way to transfer large sums of money for a lower cost because you don't want to do a money transfer, well, I don't think that Bitcoin is really good at that because you're spending like $10 on a transaction right now, but I digress. Yeah, there's going to be other options that are going to come out and they're going to be cheaper. But the reason that the speculators are buying Bitcoin is because they want to get away from a central bank. You want to get away from a central bank supported currency, which I personally, I don't. But that's why they do it. So it's really all speculative, right? Oh, I'm with you, bots. Oh, yeah. Okay. So on options, the thing you got to remember on options is that when you buy an option, you have to buy them in lots of 100. So if I buy one for $1.20, I'm actually buying 100. I'm actually buying 100 puts for $120 because that's like the minimum lot size, I believe. In the vast majority of, at least in stock options. When you go over to futures options, it's different. Could you look at Tesla? Sure. You know, we have. Oh, that's the VIX. Normally we have Tesla up here, but we replaced it with GME. Let's, we don't really need to look at rare earth resources right now. That's the play that I made. That was one that Gary told me not to do, but I'm pretty happy with that one. But that one was just dumb luck. Yep. One option equals 100 shares. Okay. Tesla. Oh, we need to go back to a 1 minute chart. There you go. Man, Tesla's taking off today, isn't it? Look at that. Oh, you know what? We need to have it show extended hours. There we go. Woo. That's crazy. Well, it just kind of shows you how much speculation. By the way, we closed that. I wish I didn't close that thing. Let me go find it again. Technology stocks moved higher on Monday as investors prepared for a barrage of earnings from mega cap giants this week like Apple, Amazon, and Tesla. Yeah. Well, the market is definitely moving up on Apple. Like, Apple's up 4% today, right? And BlackBerry. Please tell me that you're still in that BlackBerry. That you didn't sell the Black. I mean, at some point you got to take profits, right? But it is on the run, man. Oh, yeah, but when I was looking through that, the options that we were looking for were like $110 per share. So you add 2 zeros on that and it becomes 11,000. Hey, Air Cages, how have you been? Oh, you just missed the Bitcoin stuff. I'll do it again for you in a second. Oh, what was Gary saying? I'll never short against Michael Saylor. I think he's fucking nuts. He's basically turned his company into a glorified Bitcoin ETF. And if Bitcoin crashes here, which, I mean, there's no guarantee. Past performance isn't indicative of future results, but our model has called this now like 6 times overall and like 3 times since we've made the model and we've been forward testing it, right? And you've bought all this Bitcoin. Like, if Bitcoin collapses, he is screwed. It doesn't matter how smart he is. You know what I mean? So the question for me is just like, what is the right way to play it? Should I try and do a spread? Well, I could maybe, if I was doing a spread, I could maybe get it down. But I don't know if the risk reward on a spread like that would be worth it. I have to go look at it. Anyways, that was what we're talking about, Eric Cages, is that we think that we can find a proxy to short Bitcoin through MSTR. Right there. Anyways, what was I looking at? Oh, well, I'm going to keep you Tesla up there for you. Oh, yeah, we were looking for the earnings. Posts from past week. Okay. Oh, that's right. Tesla was on the same day as Apple. It's crazy that Tesla is running up to 1,000 again. I mean, at this pace, with the amount that Tesla often moves, it would not be crazy for it to reach 1,000, wouldn't it? You gotta wonder if lightning can strike twice over there in Tesla. I mean, the thing is last time around, it came out and there was all the EV credits. And I don't think anybody expected that. And I'm not so sure that all the people that were buying Tesla into it were buying it because they knew that those electric vehicle credits were going to come in and save the stock. So we're seeing a run up in Tesla again. Is it because they know something about earnings, or are they just gambling again? And I'm going to say probably they're just gambling. I'd take him on. If I can get a price, I'm 100% doing it. If I can get a good strike option for 500, if I can risk $500, I'm 100% doing it. There is absolutely no doubt in my mind. I don't give a shit how much money he has made in the past or whatever. He is doing something objectively stupid. Straight up. It's just straight up. You're betting your whole company. I mean, honestly, like, think about that. How can you say, like, I'm actually kind of surprised that you're saying that. How can you say, like, oh, betting the entire future of my company on the most speculative and volatile asset out there is prudent? No, absolutely not. This guy's going to get fucked when Bitcoin falls apart. Do you think it would be a good entry? So, man, I mean, you can always do puts. Nah, $500, it's worth it. You can always do puts, but like here again in Tesla, the puts are going to be astronomical. So personally, so here's the thing is that it's actually easier than you would think to realize that something is overvalued. Okay. It's always the thing that everybody is all hyped about, right? But it's very difficult to actually make money shorting those things and taking advantage of something being overvalued, because there are just so many strong market forces working against you at those peaks. It flips around, and the people that are lucky and are really stubborn and hold on to it can make a ton of money. But generally speaking, it's very difficult to do, right? On the other side, if something is undervalued, it's very difficult to know that something is undervalued because those ones just aren't on your radar. People aren't talking about them. Like, you've got to know the company and all of the things to look for and everything to find something that's overvalued. But at that point, those things are really, really cheap. You can buy cheap options on them. And so it's actually very easy to make money on something being undervalued, right? So there are some cases, like on this GME thing, I mean, this is so historic that certainly it's worth trying. I don't know if it is anymore. Now that we're at 90, maybe. But that one is just so volatile, I don't think I can actually execute effectively over there. This one, MSTR, because I have such a strong historical record for being able to see those tops in Bitcoin and everything else about it, I think that a short on this makes a lot of sense. It's just a matter of, can you get the cost of shorting it low enough to put a reasonable amount of risk? Because I mean, you're talking about something that, hey, you could put $500 down on puts and you could potentially turn that into 50K, right? Tesla makes up 40% of all car manufacturers on the planet. Who are we talking about again? Oh man, what is his name? I forget his name. Michael Saylor. His name is Michael Saylor. Yeah. Are you taking along here again? Well, while we've been yapping, it's gone up. Maybe I should have been taking another trade in ES. I feel like today, I usually don't do well on Monday, and since we've got a lot of people, I should, now is a good opportunity to help some of these newer guys out. Listen, if you want to take a trade with me, look, straight up. If you want to sell, well, are we on MSTR right here? Yeah, we are. Okay, so it's at 600 right now. So let's say let's see here. If I come into here, it might not even let me. Oh no, I don't want to sell the open. I want to. Why does it say sell to open? Well, okay. Limit $1, quantity 1, quantity 2. Limit pi conditions. I don't need to put all or none on it. That would give me MSTR 19 2021 $300 put. Okay. Oh wait, hold on a second. Do I have to? Yeah, I don't want you to see that. Okay. Oh, I have to complete the online options agreement form. I've never done it. Okay, I'll go and look at that. Oh, 100% would do it. I'll put it at 300. You hit me for 300. I don't know how many there'd be there and everything, but I would 100% do that trade. No question in my mind. And you know what else? Gary? You told me not to get into the oh man, I got rid of it. REEMF, but like that, I've got a 4-bagger on it now, so fuck you. Not fuck you. I really like you, Gary. He's a really good long-time member here, but he's always busting my chops. And sometimes I wonder if he just does it just to kind of like get me going. But when it comes to Bitcoin in particular, I feel like I know what I'm talking about here. So GME to the moon. So I have to say, actually, I'm quite surprised that they have been able to hold price where they have. Should we change this back over to GME? Then we can see the volume. So we're already at 36 million. It's crazy to watch that go. You said it. No, you did not. You said that it would never get. Well, okay, wait. We got to go back. Maybe. Let's see. I specifically remember you said it's not going to get back up to its all-time high. Well, I don't think it was even its all-time high. I think it was just it was not. Yeah, you were saying it's not going to get back above $1. Is what you said. And now it's $2, and we bought it at like 79 cents. But this was an example of where it's like, okay, if I can put $200 down on it, on something that I really believe in, and I've done my research. Oh, is Bed Bath & Beyond going? Because I was looking at that one. Come on here. BBBY. Oh, shit. Nice. Thoughts on BlackBerry? I think that for all of these ones with the high short interest, that they're probably going to go in the near future. I really don't like trying to just like straight buy into things like this. Let's come and look at the options change for BBBY. So here we're at, oh geez, 43, 45. Okay, well, $10 isn't too bad. That means that if we can, we go into all strikes. So I would want to see, wow, so there's that's going to have to show me more strikes. But let's say that we could get it at like 50, maybe. Or maybe what we could do is we could, we could do a spread of some sort. So we could buy like 44s and sell 50s, 60s. I wanted to see how much it was and if that would reduce the cost of it. And then we'd have to look at the risk reward, because I would want it to be that what I would make off of that spread if it expires in the money would need to be more than the amount that I'm risking. But if I can do like 2-to-1, 3-to-1 off of that on a spread, then maybe that would be worth it too. But I'll do that off stream. The thing that will kill you guys, can we go through this again? The thing that will kill you is the FOMO. Let me explain why. You see this little picture over to the side of my head? This is called the square root law of impact for large meta orders. So this is a formula that large funds, banks, etc. use to determine what their impact on the market will be. So they say we are going to sell Q shares Oops. How can I? It's hard for me to. There you go. I'm going to share. I'm going to buy Q shares, and the average daily volume is V, and then this C is a coefficient that is specific to that stock, right? And they use that formula. You can literally calculate what the expected impact of your large order will be on the price, right? So what happens? So if you graph this out, it's a square root, right? See how it is? It kind of curves over. That's because the more shares that you put into it, the impact starts. At first it's very, very high impact. It increases a lot, but as it gets large, it kind of trails off, right? So if you're seeing something and you're seeing a strong trend because there's some large, group or player out there buying it, and by the time you see it, you may already be up there at that top point where the impact is starting to be less and less and less. And the flip side of this is that if the sign flips again, oh my, something just happened. Something just happened. That I have never seen anything like that in the 10-year Treasury. Holy shit. Hold up. What is that? Well, I mean, we do have a 2-year no auction today, but that's not for several hours. Wow, what was that? No, that's not it. Sarah Huckabee Sanders announces run for governor of Arkansas. That's interesting. So let's see here. Gary's saying don't mess with instruments that you don't know. Well, I understand quite a bit about options, actually, and I was taught how to use options by some of the foremost experts in the world on this, actually, so I feel pretty confident about my ability to go in and take an options trade if it's only $100 or $200. That is nutso. And then they buy another 3K at 08. Something is up. They're buying up the treasuries like that, but it's must not be related to any kind of risk event because the futures, the E-mini futures, certainly aren't selling. So I don't think that this is a risk-off trade. This must be something related to the auction and end-of-month buying. That is incredibly aggressive for the 10-year. So we keep an eye on that. But here again, this is just an example of the FOMO, right? You don't want to be the one getting up here and at the top, right? By the time you notice, you're going to be that last 80% that has to move it up. And then when they take profits, you're going to get dumped on, right? So that's why you want to avoid the FOMO. You want to get in here. You want to get down at the very bottom before he even really starts doing his thing, right? You want to know what the trade is beforehand and start taking it as the large meta order starts to get transacted, like right at the very beginning of it. Okay, now GME is moving. Look at that, 112. Oh, let's change this back to GME.
Block sell.
Bed Bath & Beyond is in a very similar spot to Gamestop, so I find it really interesting that it's moving today. Can you hear my baby son is unhappy at the moment? Man, it's interesting how that one just took, isn't it? I guess with GME, because the options are just so expensive right now. I mean, look at that. Now they're asking $50. Now they're asking $50 for at the money per contract. Yeah. No thanks. I'm not going to risk $5,000. But that just moved up so quickly. It's crazy. Well, that's the first squeeze. Here's the problem, is that if they execute in the most efficient way, all of the shorts covering with the amount of volume that's trading these days, the issue is that having this much interest in GME actually kind of helps them get out. I mean, granted, it looks like the order flow is very much one way, so that certainly doesn't help them if it's moving up. But if we were to continue to trade, 100 million shares a day, and it were to go sideways, that would give them all that they needed to get out. You know what I mean? But if they execute in the most efficient way, my calculation, and I don't have a very good data, so I wouldn't expect this to be super accurate, but my estimation was that the impact on the stock would be about $21. And MSTR, yeah. So as I already stated, so look, I'll show it to you this way. If we come in here and we do the probability calculator, okay, and we go to MSTR, okay, and you look at the probability here on it going down, they're saying that like 275 is like a 50% is like, that's the edge of the thing. And then when you look at the upside, they're all pricing it to just continue going. So it is really based on what the options are pricing in. For us to go short on MSTR is a real true YOLO. I 100% understand that. I'm still saying that Bitcoin is going to turn down and that MSTR is fucked when it does. The mispricing in the market is just that extreme. What about options on Tesla? When should we buy? Well, do you have $100,000? Because you know what? I do feel that Tesla is probably overvalued. I'd like to see what happens at the earnings on Wednesday. I don't think that trying to short Tesla is likely to work out. On these other ones, I have catalysts and fundamental drivers and models and stuff to suggest to me that there's going to be a turn and what the degree of that turn is going to be. In Tesla, there's no way for me to know. This thing just keeps going in, and since it's so popular and like everybody knows that name, they keep getting in. There's no way, I don't think that shorting that one really makes sense. I would need Tesla already be going down considerably before I would, and then try piling on. And of course, it will be really expensive to buy puts for it at that point, but the market's probably going to underprice them as expensive as they get, I guess. Yet don't fight one of the richest people on planet Earth. Well, I don't know about that one, Gary, because if you say don't fight one of the richest people on planet Earth, you should not be buying it, because even Elon Musk himself said that Tesla is probably overvalued, that the stock is probably overvalued. And he even backed that up by selling shares. Like, he even backed that up by, like, the company sold shares. So if you think that Elon Musk is so smart and that you should go along with what he says, you should be going short, right? Do you think Tesla will jump in the air in a month and it'll be exciting to see? Well, I mean, there's the earnings. Like, let's just see what the earnings do. Maybe the earnings come out. Maybe they don't have the electro vehicle credits anymore, and the thing just falls apart. You know, and then everybody will be like, oh, we could have seen this coming a mile away. Y'all got, you know, and then at that point, everybody will say, oh, you could have seen it coming. But today, none of us are willing to stick. I'm not willing to stick my neck out short on Tesla. I did take it short on Tesla at one point, and I actually caught a really good short, and I did it with puts. But that was like a very specific situation, technical situation. That the spot that we're at with Tesla with the earnings on Wednesday and stuff, I'm not so sure that a short really makes sense here. So I guess that's all I can say. After this, people should be terrified to short. Oh, totally. Well, you know, we had Gamer TV, 1323 Gamer TV. Yeah. I think that you certainly shouldn't be piling in short on these names that are already heavily short and have a high degree of short interest. So now Tesla did have a high degree of short interest, so I guess it qualifies in that case, right? But that's where we're getting in at that. One of the issues that we have in the market, I'm giving you like an edge, a real edge here. And normally I wouldn't give you an edge this solid, but I don't have any way to take advantage of this edge. So maybe you will. When these really big traders are trading, they have to do what's called mark to market. So you make a certain amount of money off of your options, and then that's kind of what they use to value their portfolio and determine how much credit and margin and stuff that they have, right? Well, the reality is that what you're going to make off of a large trade is not what the last price was. You have to factor in the execution impact of the thing you're trading when you take it off. So the reality is that the mark to market that they're getting is higher than it really should be. That if they take profits on that, they're not going to make as much as they've got. And they are using that to their advantage, so that they can increase the impact that their trading has from the options. Does that make sense? So up to you to determine how to take advantage of that. But there appears to be a very clear structural market inefficiency around this area. And this is why you're seeing some of these moves with options taking place. 50,000 contracts now in GME. So remember, on Friday, they traded 194 million shares, and they are already to 50 million. And we're only an hour into trading. Well, I was wondering if the treasuries were going to pull back at all, and then maybe we could try taking one in there, but it's still up there. When be careful, Gamer TV. Winston's going to start following you, and she will be your best follower. she comes in. She doesn't trade with us, but and she's an older lady. She comes in and watches our stream every day, is probably more active than almost anybody else, probably my best follower. Tell them to fill me in, Seb. Oh, man. So I don't know how mark-to-market factors into Enron. I'm going to have to look that up. The Sam. Oh, you don't stream much? Maybe you should. You know what, so my mom, she plays solitaire, and she was showing us the stats of her solitaire. She has played 3,000 games, 300 hours worth of solitaire, and her win rate is up to like 70% now too, actually. So like, I'm like, you know what you should do, Mom, is you should stream yourself playing solitaire. She's like, no, nobody will. Yeah, I guarantee you start streaming on YouTube, streaming solitaire. I bet you she could get at least 50 people to watch her do that. At least. Thanks, speculator Seth. You have the cool kids table. At least today I do. I need to come in and start saying something political to scare them all off, and then. Oh, how come my YouTube page is not updating, but my my robot one is? That's funny. Oh, by the way, did our robot stop out? No. Oh, it's broken. That is so broken. Crap. I've got to figure out what the deal is. It should have stopped trading today and it didn't. So there is still a bug in that piece of code where the risk management portion of my auto trader strategy, it works when I do it on backtested data, but it doesn't work when it's running live. And I don't know why. How has everything else been doing? It looks like the rest of them haven't been doing too great today either. Yeah, that's okay. I think that there's got to be something wrong with my backtest because it shouldn't have lost that much. And it was taking trades in areas that I don't think it should have taken. So maybe I'm not sure. There's got to be something different about it when it's running historically versus live. I've got to figure out what it is. It's going to be something really, really. You guys not familiar with NinjaTrader, you know, this is going to be some really crazy edge case that I haven't seen before. It probably is overfitted. Or which model are you talking about? Are you talking about the one that I'm talking about now, or are you talking about the video that I put out today? So you guys go and check out, I put out a video for a strategy that we've kind of been using. Well, an indicator that we've kind of been using. So that one, I would say it is fitted. I wouldn't. So here's the thing with technical analysis is you're going to get some technicals that it is taking advantage of some sort of inefficiency in the market. And generally speaking, what's going to happen is that people are going to see that inefficiency and they're going to take advantage of it. And as they take advantage of it, the execution impact costs of their trades are going to arbitrage that edge out of the market and it goes away. And that's why a lot of technical analysis strategies, especially simple things like moving average, Bollinger Bands, things like that, are really hard to make money off of, right? So all of those edges will kind of go away. So then what will happen is there's another set of edges that sometimes they work and sometimes they don't. So like there will be markets that are really favorable to that strategy and markets that are really unfavorable to that strategy. And the whole key is knowing when you're in that market where it's favorable to that strategy, which is really, really hard to know, right? But in this case, we're taking advantage of like extreme auto correlation in the market. And so when we get into a market that is like that, you could use this strategy. So while I would say that it's true that it's overfit, like it's fit to use the past year, if you go to years past, doesn't work as well. 100%. I say that over and over and over and over again in the video, right? But maybe they pass another stimulus. Maybe like we have a crash and another stimulus and, and then you'll say, this is the perfect time to use that strategy because we're seeing a high degree of autocorrelation moves in the market. And then you could use that and it would work. You just have to know when to use it. Well, that was the other one. Anyways, I totally understand. I get, like, here's the thing. Is like I go and I watch a lot of YouTube channels and I kind of keep tabs on some of the other channels, at least the ones that are good. And I read like everything that comes through on the trading subreddits. I read everything that comes through on the Facebook groups. There's a lot of dumb people out there. I mean, let's just admit that. There are a lot of new traders in the market and a lot of people that don't know what they're doing. And there's a lot of people that claim to know what they're doing and they don't. And I think that they're just faking it. Okay. When I feel confident. Maybe I'm wrong, and if I'm wrong, I'll put the money up, and I won't make money, and I don't claim to make money all the time. Okay, I feel really confident on the Bitcoin thing. That's about the one thing that I'm like really truly confident in, right? That it's overvalued right now. So I totally understand when people come in, they're going to assume that you don't know what you're talking about, right? So I totally get it, but I'm just saying here, okay? I know some things. And one of the things that I'm pretty good at is I would do a lot of backtesting in NinjaTrader. I understand a lot about doing that and what the advantages and limitations of historical backtests are, and so on and so forth. And that's why we do the method that we do here, right? There's very clearly with J, there seems to be an issue between the backtested performance and what it decides to do real time. I'm going to bet that when I go back after the stream and look at the, do a back test again, it's not going to be taking the same trades that it took when it was running on the sim data. So there must be some sort of logical error that there's a difference between live and sim that we haven't factored in. And it's screwing the indicator up and making it take a lot of trades that it shouldn't. Fake it till they break it. Yeah, so and here's a piece of advice I give you if you're new. Futures, especially, day trading, but then futures trading in particular, is not a space where it is advantageous for you to try and fake it. Okay, because first, you're going to end up taking big risks and losing money off of those. But two, is the guys that really have been doing this for a long time, they will sniff you out immediately. They will sniff you out immediately. They know the sorts of things that you're going to say that are wrong. They know there's so many memes. I'm going to call them memes, but there's so many things that people believe about markets that are untrue that you can prove with empirical evidence, and they know what those are. And when they see people out there saying to do those things, they immediately is like, okay, like this guy. And then you can look at how far, into that hole is it, is it something that if you've been trading a year, you should know doesn't actually work, or is this something that even some of the most experienced people don't know? So don't fake it. Oops, I need to stop this right here. How are we doing on frames, by the way? Okay, yeah, we've done okay. I'm going to say, though, that now that things have kind of cooled off, that I'm going to change this so that we're not getting as many updates from Fidelity, so that our futures data will be nice and smooth. I'm very much of a neophyte, but could there be any timing delays that are different when backtesting versus that are different when backtesting versus live data? Execution delays, some sort of lag somewhere. Absolutely, there could be. Well, so first of all, the sort of thing, that you're talking about is more like if you're taking a live trade, the biggest issue that you're going to have is that there is an execution impact to your trade, even if it's just one lot. This is something that I think that all retail traders need to understand, is that if you buy something that has an aggregate impact on the market, even if it's extremely small, and the aggregate impact of all of you together, has a certain influence, right? And same with when you sell. And so when you start trading something, there is going to be a slight tendency for just the you trading it to make it less profitable. That's just the way that it works. Now, if you're just doing one lot, hopefully it shouldn't be very much, but that's why you kind of need to have a certain amount of edge, Your edge can't be, I'm placed a really big buy order and everybody follow me because of that. It won't work. I guess your edge could be, I run a stream and I take a trade and everybody follows me, but that doesn't work maybe if you were doing a low flow stock, this is why I trade treasuries, so that I can't have that kind of an impact, because I don't want people to follow me. I think that if you all follow me, it would take out my edge. That's why I don't really explain a lot of the trades. 140, there it is, man. And look at the volume. Well, so now we're at 64 million. Did they just halt it again? Well, I don't see anything in the NYSE trading halts. Oh my gosh, hold on a second. Now, it looks like, I just wanted to check some settings. It looks like it may have been halted. because I'm not getting data. Oh man, look, Bed Bath and Beyond is just like insane. By the way, look at rare earth element resources too. I shouldn't show you that one. No, I don't own any of that. Ignore that. Yatan says not halted. I don't see anything coming through that it's halted, but on Fidelity, I'm not. The volume number there is not increasing anymore, right? Like, let's just try MSTR and then come back over to do, and then change it back to GME. And okay, now I've got it. Maybe I just needed to do a little something to kickstart it. Now it's, yeah, is it out of control, right? Well, so if they halted it down here, what's the next step that they're going to halt it at? At some point, they're going to halt it. I bet you that at some point, the SEC is going to step in. I think at some point, the SEC is going to step in. And when they do, we'll know how many shorts are still in there. And if there's still a lot of shorts in there, it'll just, once they open it back up, it'll just keep going. When will it peak? Well, so the big thing is there's those shorts, right? We want the shorts to cover. So the way that I've been tracking this, and this is not the best way, this is where I don't feel like I have very good data to trade stocks. You know, I'm focused on futures. So if we go to like Yahoo Finance, right, and you can look at statistics. Okay, and when you come down in here, it will tell you share statistics. So you can see the shares short. So the last time that it updated, oh, I guess you don't actually know how many shares are changed hands until the end of the month, do you? So at the end of the month, though, I guess we will see how many shorts are still in there, and we can do some further calculations. But at the time, there was 71.2 million. What's an indication that that's a good question, Lind. No, you're asking exactly the right question, though, right? So look at the curve. At first, it moves really fast. And then as time goes on, the aggregate impact slows down. So what is going to be the indication that it's slowing down? You will come in and there will be a day, like we're probably going to trade 200 million shares today, okay? But let's say that we came out tomorrow when we traded another 200 million shares and it only moved up, well, let's see here, it's already moved up, let's say $50, it's $60, okay? And then tomorrow we do it again and it's only moved up $30. And then the next day, it's only moved up $20, even though the amount of actual shares that are being traded is somewhat constant. It's still in the hundreds of millions of shares a day. That tells us that we're up in here, right? Another way that you can tell that you're up in there is just the overall interest, because something like 80% of the orders end up being up here for this kind of a move. Something like 80% of people get in at the top. That's why I've been saying, definitely think you can make money on this. It looks, I mean, I don't know now. When we started at the beginning of the day, I thought, well, there's probably more to go, but it doesn't look like something I can catch. I guess I could have bought a share, made 50% on that one share, whatever. That once you start seeing like the real hype, that's when you got to start thinking about taking it off. So today was like the real insanity. I don't think that tomorrow will be as insane. So personally, for me, if I had gotten in this, I would be looking to take it off somewhere today. Trade stopped out. This is why I don't trade after the profit target hit. I really wonder, you know, Ace, I went back and I did some back testing on that. And I told it like, if it makes a profit target, stop trading. But the thing that was crazy is that it only did it like 50% of the time. Like that particular strategy, I'm not going to explain to you guys what that strategy is, but that particular strategy, it really is like a Jekyll and Hyde. Like there are days where it works and there's days where it just like straight up didn't work. Okay, now it's halted, you guys are saying, huh? Let me double check. Oh, yep, I just saw it pop up here on my screen. It was halted at 10:47. I'm in Mountain Standard Time, so, you know, add 2 hours to that. So it's already been halted for 2 minutes. So we'll see what the resume time is. The last one they actually held it. They actually took longer than they said. It wasn't the $5. Has he taken a breath? Yeah, you're probably right, Gary. In fact, you know what? We'll take a break here. When we're at the peak of the stream, I will be gone for about a minute or two. I'm going to go and get some water, and then we can keep going. And by the way, guys, thank you very much. If you enjoy this stream, make sure you hit that like button. But also, we do this every day, and we have a very dedicated group of guys that are here. You know, 2 dozen guys that watch every day. And if you want to be a part of that, the best way to do it is to subscribe and then do the bell icon, because the bell icon will notify you about like literally every video and stream that we do. So we'd love to have you. We also have a Discord. So I don't know, check the video. I got all this stuff. You can buy these mugs. The mug, I love the mug, man. Traders, it's so great. These mugs are great. You can get that in the store below. They're pretty cheap. There's I have the indicators that I use. You can't see them on the screen because they're covering them up. But some of the stuff that I use to trade with, these histograms, you can get those, speculatorseth.com. And I have a Patreon too, where we post the Bitcoin stuff. So it halted. So while it's halted, I'm going to take a break. All right. I will be, let's have Fidelity up. I will be right back. All right, we're back. So let's see here if Nicey will tell us here. Oh, Churchill Capital got halted too. That's so funny. Oh, we'll load it again. So by the way, guys, if you want to see this information, oh my gosh. Yeah, there's too many people hitting it. If you go to nicey.com/trade-halt-current, it will show you the stocks that have been halted. You can't see it now, but CCIV was also halted along with GME. So many people are hitting it that it's not loading the data for me anymore. That's funny. Oh man. Stop, guys, stop hitting F5. Stop it. But yeah, that's the second circuit breaker for them. Now it's showing me. So they halted it at 10:47, and it's normally about 5-10 minutes after that. So I think we should be getting going here again. Oh, did it? They just opened it back up again. Okay, it just started going again. Man, and after the halt, it jumped again. Oh man! Oh, by the way, E-mini taking a dive there. Let's see here. Man, those treasuries. Breaking. California Governor Newsom to lift regional stay-at-home orders, reports AP News. Okay, that would not make the S&P 500 sell, so I'm not sure it explains it. Man, I don't know. There's something's going on out here as I've been yapping that I missed, because the index looks very unhappy and the treasuries are up big time. Okay, so the GME fell hard there. Whew. So here's another thing is I'd be careful about, guys, is if you look at the depth of market over here on the ES, okay? So I will highlight some things for you on the screen here, so you might want to watch. This blue column right here, these are people with limit buy orders out on the market. And this right here is people with limit sell orders out on the market, okay? Now, the number of buyers and sellers that you see at any one price is not really accurate of how much latent liquidity is out there. There are a lot of orders that will all of a sudden show up on the limit when you start to actually trade in that area. So it's you see here like the inside two columns that there's like 500, 400 trading in there. So that gives you those are the market orders hitting into it. So if it took 600 contracts to make it go bid there at that price, right, that tells you how much liquidity is involved, right? Well, something that happens is when you get a really slippery move down like this, that means that when you come back up, that there typically isn't as much latent liquidity behind it. So you kind of leave this liquidity vacuum behind you, and that can kind of suck them back up often. And so that looks like what probably happened in GME there, right? Is they broke out after the stock was halted, and then they got pulled back down by the halts. Although, you know what, the way that this behaved again, I think this is a good example for something that we've been harping on all year, right? Which is that it doesn't appear to me that the halts are very effective. It seems to me like that the traders just start gaming the halts, intentionally push it into the halt, knowing that when it opens back up, it's going to take another 10% jump, because the halt just makes more people even more interested in it. They're attracted to it. So I don't think that halts are the answer. Well, I mean, it's all over the place there. That's for sure. The liquidity and GME is probably really late right now. I wish I could see the depth of market for GME. Okay. So I'm wondering, I guess one option here on why the E-mini is going down is because the treasuries really took a rise there, right? Like we saw some really aggressive order flow. This is beyond insane, right? What app should you use? Well, so for stock trading, you got to remember my expertise, like my niche is futures trading. So if you want to trade futures, I have a video about what the best futures trading software platform is. And I use Jigsaw Day Trader for my DOMs, and then I use NinjaTrader 8 for some of my charts. If I come over here and show you my charts, those are all NinjaTrader 8 charts, right? But if you're trading on stocks, it's a little bit more complicated of a thing. I don't really feel like that there is really a truly solid platform out there for stocks. They all kind of have pluses and minuses. TD Ameritrade is probably the most feature rich. At some point, I think that I'm going to be able to do stocks on Jigsaw, and then I'm probably just going to use that. But how do you hedge your futures? So I don't. I just trade outrights. So, here in the E-mini, I don't want to touch it at the moment. I mean, man, look at that. Jeez. So because of that last little slip, I'm like, okay. There's a lot of crazy selling here, though. GME is kind of following with it. So my Squawk Financial Juice is just pointing out that Schumer did say that they were going to try and pass another stimulus in the next month and a half. And I don't think that really explains that move. So I think that our best theory right now is that people are moving into the dollar and treasuries, and the higher interest rate in the treasuries seems to be having an effect on stocks. This is what it looks like to me. Anyways, so if you want to trade futures, I have a lot of videos about trading futures, right? Talk about what you got to do for the micros. Oh, money has monopoly money. Well, so all of the money that I trade, I'm on the futures. I'm not trading these live today, but I'm always using money that I can afford to lose. It's all its own self-contained thing now, because I don't always make money. You got to realize, like, the chances of you making money in futures, it's like 5%, like, that actually make it. Did it halt? Did GME halt again? Yep, they halted it again. Jeez. They halted it at 10:58. So it's been halted for about a minute, 2 minutes. Man, okay, so there's the E-mini. Maybe right here we'll take a sim order. That's probably too late. Okay. Gonna babysit this. Okay, so there's a bit of a volume cluster right here. So I'm gonna scratch that and try and get a better spot. Oh, what? They went through me and the sim didn't say that I was filled. That's retarded. Okay. Oh, it's volatile. Volatile is all get out. Wow. Maybe I should just take the 2 points. No, see, look, they're not touching it. If they go through it, they're going to go through it. Hold. I'm not a fan of hodl, to be honest. Hodl is a meme to encourage you to do the wrong thing. When you listen, if you're an informed trader, that is, you're making a trade off of a piece of information that you have that you believe is not fairly priced into the market, or that the whole market doesn't have, then when you get your move, you get out. You're done. You made the money. Get out. There's no reason to stay in it. GME right now, I don't know if that's over. Well, that one did not work out at all, did it? I got dashed pretty quickly there. Well, oh, why do I have an order out in the 10-year? That doesn't make any sense. Let's just wait here. Let's see if they go for that low again. So I'm still getting some cascading sell orders in here. Okay, a little bit at 18. I will do a second one there. And then if this one doesn't work out, then I'll probably just quit. Oh, well, you don't want to get filled that way. No, 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 no. No, 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 no. That's going to go lower. Okay, we should. Oh my gosh, my strategy is like going, what the heck? What are all these? Sent cancel requests, attempted to close the position and terminated itself. Ooh. Well, you know what? That move down, Jay should do poorly on. Did he lose money? Well, he disabled himself, so I can't see it. Okay. And GME really turned down there, didn't it? So I'm not gonna be watching your messages quite as much here at the moment, because I'm trying to focus on what's going on here in the order flow, see if we can catch something. Not there. Yes, right there. Shoot. Fast. Didn't really get the price I wanted. See if I can. Oh, shoot. Nope. It's showing some signs of doing it, but we'll wait. Again, let's wait 5 minutes. Get out of GME before you crash and burn. Well, I tell you what, that second halt definitely, since we're now below the first halt, that's not really a good sign, is it? They're definitely doing it here. Ouch. Buy now if you can. This looks to me like a market where it's so volatile that we're probably just gonna get screwed over no matter what we do. I'm gonna continue taking these on sim, and then if I start to get something working, then maybe I can switch accounts. There's definitely like a volume cluster there, but like. At the moment, it looks to me like this right here. Okay, so that was a pretty wild move there. How far are we? So now we have some targets that we can look at on the upside and downside. Based on the VIX. What do we got here? I need to look here. Oh, I need a much deeper in chart. How did they not touch it that time either? There's definitely volume trading here though. Okay, so 38.13. Oh, did that stop out? Yeah, it did. It stopped out. We'll get out. Sorry, wait, what was it again? Oh, we're past it. 38.13. Next one is 37.86. Oh, okay. Oh man, Indy got slaughtered too. Joseph made money though. Oh man, the robot's just so terrible today. Okay. That one's looking pretty good, but it's still being pretty... Okay, that's good. And then... Oops, I need my little thing here so I can kind of keep track. Okay, right. Good. Things are slowing down. Hopefully we're not losing too many frames. The E-mini is being so volatile. Oh, wait, what? Oops. I screwed it up. I pushed the wrong button. Okay. Okay, Seth. Wanted to cancel that. That's crazy. All right. Well. I'm just going to take on excessive risk here and just kind of play around with it because clearly not in a tradable state for me anymore. Is Wall Street trying? I don't think so. I think that some people took profits there is all that was. So I wouldn't. The thing is are the short sellers out? I mean, I don't have any way of telling that. But your life sings. No, don't do anything crazy, guys. We're back to like the entry, like the open basically in GME. So that's, you can be careful. Just remember, 80% of retail traders will lose money on this GME thing. Like the big money was already made. Okay, that's good. Jeez, no, this is gonna go lower because it's still wild as AF. Wow. What the fuck? This is nutso. I have not seen the E-mini angry like this in a long time. Is this really all just off of the bonds buying up? I don't know, man. There must be another piece of news that is not really widespread yet, or that I missed. Don't hodl, guys. What did I tell you? Listen, I'm not gonna pretend like I got it all right and everything because, you know, it came back down pretty hard pretty quickly, and that's where I was saying I don't think that I have the platform to really take advantage of this thing. But you get your winner in a movement like this, you're gonna get your big move up, and then you're done. You got the thing that you wanted, you won. You're done. Stop screwing with it at that point. Let's see here. Oh, yeah, it did get halted again. What is it? Is it like 3 and then it's halted for the day? Whew. That's crazy. That is still... Okay, well, it looks like I maybe finally caught it. So I think I don't know if I managed that too well. I mean... I certainly wouldn't have taken that with a live order. That's just a little bit too crazy of a market for me. But I do still think this is gonna flip back up. So, oops, why do we got that? I want to be, I'll take 1 off up at 200. Okay. You just bought more. No, you didn't, because it's halted. I'm telling you, I said it at the beginning, didn't I? The SEC is going to halt it and start a multi-week investigation. It's like all the hedge. Well, you really got to wonder, do you think that the Citron guys are still short? That would be like, I mean, man, if the Citron guys are still short, like they haven't tried getting out of this already, then like, Holy crap, you guys are dumb if you guys being Citron. Oh geez, am I getting some of my data here is, I think, a little bit delayed. Come on. Come on. Almost. Nice name, Mr. Streamer. Thank you. Oh, it's Seth Nolan. There you go. Yeah. I tell you what, it's so much easier to just choose your own first name for when you're streaming than trying to remember an alias. Oh man, so they touched me, but they didn't fill. I gotta tell you, I really want to know what is going on in the E-mini here. The degree of move that we're getting here is quite excessive. Okay, GME still hasn't started up yet. Has been 5 minutes though. Oh, it's still insane. I mean, look at the amount of contracts that they're trading up in here too. So it's not like there's not even any latent liquidity. They're definitely taking it all over the place. Who's halting? It's the Nizy. Or actually, let me take that. Yeah, it's the Nizy. It looks like Churchill Capital got halted again. Oh my gosh. Yeah, isn't it right, Gary? Is it quite interesting timing that the day that you have like peak retail insanity with GME, and I'd say Churchill Capital, fits there in that as well, and the E-mini is getting just destroyed. And there's not any super clear catalyst for the movement in the E-mini either. It's just like in the treasuries. The treasuries came, they bought very aggressively. We really could have taken that. It was like what, 137.10, I think it was. We could have taken that one, but I wanted it to come back. But there was a very aggressive order flow in there. And then later I said, well, you could be careful with those. I don't know if there's any fundamental reason for it, but sometimes they'll turn around and sell the indexes. And they did. So it don't always happen that way, but it's just whenever that happens, there's always something in the back of my mind. I don't know, though. We'll see. I mean, I do think eventually they're going to pull back and buy the dip. I mean, with the amount of volume that's trading through in here and everything, they're going to buy the dip. There's very clear signs that there's some dip buying going on in here, at least is what I would say. Okay, it looks like GME is trading again. Okay, finally got my fill. So now I can just let the rest of this run, and that does end up being plus for me. So I did that by averaging down and doing foolish things. Don't do that. Don't be scared. Well, you guys sound like the Bitcoin traders, man. This is a little concerning to me. So let me explain a little something about it, the way that I look at markets, okay? I view the markets as two kinds of players. One set of players doesn't really know what's going to happen and is trying to take advantage of liquidity. These tend to be passive players. They tend to try and use the spread to their advantage. They're taking advantage of statistical aberrations that they found in the market. There's another set of traders that are called informed traders. And these are people that have some sort of an edge. They know a piece of information that the rest of the market doesn't. So if on Friday, for instance, you were buying GME, then the thing that you knew is that there's a high degree of short interest, that the people that are short don't seem too bright, and that there's a large number of retail day traders that want to buy it and stop them out. That is your edge. You're trading an informational edge, right? So if you have an informational edge, the way that you trade it is you're in, the move happens, everybody hears that that move happens, the information becomes public, they say, GME moved up another 50% today off of all the retail traders buying it, right? So now more people know about that piece of information. What do? You get out. You get out right there. Now, are we to that point in GME? That's up to you to decide. But all I'm saying is don't just hold it for the sake of holding it, thinking that all we've got to do is keep buying, okay? Because the square root law of market impact tells us that that's not going to work, okay? The higher number of orders that you guys are using, the less your impact on the market is. And so you can't just say, don't sell, like it's not. No, like you're going to be forced. It's going to be forced on you because any large order going the other way is going to have a larger impact and it's going to squeeze you out. Right? That doesn't, it does have an effect. I mean, I'm not going to say that I can pinpoint the exact price that it's going to go to based off of the math, but there are certainly things that you can look at with order flow that you can get a pretty good idea of what the future order flow is going to look like in certain extreme situations. But this is where I'm saying that it's like, if I know that I'm going to buy 1,000 shares or whatever the deal is, like I can calculate what the impact on the market is going to be. Like this is how these guys at Citadel Capital do this. So they say, here's an inefficiency in the market that we know exists. But then they say, well, we can't trade too many contracts because if we trade too many contracts, it's going to ruin the edge. So they've calculated out very precisely how many contracts they need to get in with to not ruin the edge, right? They can do that. Now, can you guys do that? No, especially since you don't know how many of you there are and how many orders you're actually going to have and what your net impact is going to be on the market, right? So that's why I'm saying, like, when it starts to slow down, like if you get the move, take your profits. If it starts to slow down, take your profits. Because when it comes back, it's going to be too fast for you to react to. And I don't think that any of you guys are planning on holding it for the next year, are you? Am I bullish or bearish? I'm a trader, right? I'm not necessarily bullish or bearish. Literally broke a record, so anyone who's saying they can predict it is wrong. Well, that's true. Well, is it slow now? I would certainly say that the pace of volume in GME has slowed down. What I would really be looking for is you're still getting a lot of volume and they're not moving prices much. That's not what really happened here. What happened here was it appears that we got a liquidity volume and then maybe some forced profit taking when it came back below that halt area. So that's another one. I just if the thing you're trading gets halted, I would always think about getting out. Like after it gets out, there's probably going to be a spike afterwards, but that is almost always a short-term profit-taking area. Do I see any major price correction coming in what? In the E-mini? Well, we just had a major price correction in the E-mini. It looks to me like that one's done. So we got a lot of really skittish first timers today, adding to volatility. It could be. Another thing that could be going on though, just like if this is the impact of our orders, right? Let's say that this is the guy that's short. Let's say this is Citron, okay? And they are forced into buying, and so this is the impact. as they put more and more orders out into the market, right? When they're done, there will be a short-term regime change like this, because the market has a long-term memory. So it will remember that people were buying, but since the order flow is equalized back out, it's going to pull back a little bit and it's going to go out flat. So we can go and we can look at, you know, if it does that. If it does that, then maybe we can say, okay, somebody was buying, or some group of people were buying there and they were done and we had a pullback, and now I think that more people are going to come in and maybe we'll have another wave. You could say that. The difficulty in here comes is that I can't, there's no like indication on any of the orders about who they are, right? So if that was Citron, like if I knew that that buying was Citron exiting their short, then I would be done, right? Because the whole trade is based off of Citron stopping out. 11, I wouldn't say that. Question is, are there any trapped longs now? What would they do? Well, that's the funny thing, though, Vlad, is listen to what some of these guys, these new guys are saying. So they're saying just stay in it, and they're mad at me for suggesting that there are prudent places to take your profits because you want to keep it in here. Listen, guys, let me give you a piece of advice. These other traders, they're not your friends. They're competitors with you, okay? You do what's good for you. You get out based on where your plan says to get out, and based on where your edge says to get out, and based on where the empirical evidence and backtesting and information that you have and you're basing your trades on say to get out. Don't stay in for somebody else. Take your profits and run and let them eat it. That's how the game works. Just saying. Just saying. Well, do you think that the E-mini over here is done? This might just be a little pullback, but I'm also kind of thinking that this could turn back down hard, come back over to like they might try and come all the, wow, it really moved, didn't it? They might try coming all the way back down here and then pumping back up. But look, we've built our, because I was fooling around and working in a position and everything, they'd have to go all the way down to 73 to stop me out. In fact, we'll put that down there. I'll hold it for the long run because I think that in the end they're going to push up on the day. My trade of 8 was glitching, so it was a lot of panic selling. Yeah, totally right. Was it halted again? Ugh. Yep. Just barely, just like 10 seconds ago. Jeez. This is just crazy. Just shut it down for the day. Oh my gosh. Now, let's see here. Let's do some research, trading information. Here's their plan. The plan, price bands. I'm wondering, is there a limit on the number of times that they will halt it? If a security is in a trading pause during the last 10 minutes of regular trading hours, the primary listing exchange will not reopen trading and will attempt to execute a closing transaction using its established closing procedures. Doesn't say anything about where they are, just what the bands are. So it doesn't say what I really want to know. keep going. Let's see here. What's the Treasury doing here? They're just kind of sitting on top of my stop out zone. So, and we are getting a pretty good profile coming out here in the 10-year too. Actually across the board. So that's good for us. What about the dollar? Okay, the dollar's kind of down, but it's not like breaking out of that range. If the dollar were to come back down to like 90.3, then I think we could be in a good spot. Cotton candies, unicorn hopes with rainbow coloring of possible ruin or rewards. By the way, gotta check on MSTR. Looks like they're still... Okay, they came back a little bit. Let's see here. Oh, they went... Okay, so we did get to my second target, and that's where they're bouncing from, so that's good. If you have any special effects, what are your... Am I about to hit 500 viewers? Am I really? You shouldn't tell me those numbers. Wow, I am. 486. A lot of messages too, by the way. Well, thank you guys all for coming in and watching. It sure has been a ride, hasn't it? I really didn't expect all that crazy stuff to happen in the E-mini. I probably shouldn't have faded it as many times as I did, but it does look like I got it to work out in the end, so I'm okay with it, I guess. Now that it's kind of pulling back, you know, and I took the one contract off, I could, if I saw a spot where I really felt like they overextended down here, I could buy it again, but for the moment, I'm not really seeing it. I should come over here. Ninja Trader was a little bit delayed there too, by the way. Should I drop 10? If you're a retard and you don't know anything, then you shouldn't trade it. So I know I keep harping on this picture up here, but I'm teaching you something. Listen, if you work for a big bank, this is what they do, because they don't necessarily care about the directionality of it, right? They're executing for somebody else. So all they care about is how do they want me to buy, how do I execute this buy in the most efficient way possible, right? This is what they use. This right here. The size of the emitter order divided by the average trading volume in the day, square root of that times a constant that they calculate based off of past experience, right? So why does this matter? Why does this matter to our friend who says that he's a retard and he doesn't know what he's doing? If you buy, you're going to have, and you're big, you're going to have an impact on the market. Even your one lot will have an impact on the market. It'll just be very small, right? And at first that impact is very high, but then as it goes along, it actually decreases. But then when you start sending orders the other way, man, it's so hard to try and point my finger at the right spot. You start doing them the other way, right? Then the impact of your orders start having more impact again because you're going the other way. So if you buy something and you sell it, you're going to have an aggregate impact on the market. And in net, that execution impact is going to make it so that you don't make any money. That's all, everything else being equal. So in order for you to make money, what has to happen? Somebody else has to come in after you and buy it. Perhaps because a piece of news was released, or they came across the same piece of information that you came across to buy it. But what does that mean? It means that it does not make sense to place any trade unless you believe that you have an informational advantage. This is all about informational asymmetry. You know something that the rest of the market doesn't, and you're trading off of it. Whether that is some sort of historical tendency for price to go in a certain direction, or a piece of news or information about the way that a company works or what is going on with all this stuff, or you're really good at keeping track of what Wall Street's bets is doing and you know how they behave, that's your informational advantage. But if you don't have that one, don't trade. And just realize trading is not for everybody, right? Okay, only like, 10% of traders are really profitable in the long run. Now, if you're trading stocks and you're just buying and you're like swinging it, that's probably okay. But I'm just warning you, especially over here in GME, this is like a scary game. You notice I have money here in this account, okay? I could have tried buying GME, right? But I said, no, I'm not going to, because I don't think that I have good enough execution to play that game. So I stayed out. Because you know what? Maybe what would have happened for me is by the time I noticed that it was on the run and I tried buying it at 130, and then you're stuck, right? A lot of us GME are still winners, but I feel like losers for not getting out at the peak. Well, that's okay. Listen, you don't stress about that too much. The thing that I would say on that one is go back and think, okay, like, what is my exit plan? How do I determine that it's done? If you don't have an exit plan, don't get into it. Okay? How am I determining when we're done? Well, I want to be at least above 38.25. I have numbers. This is what you get at speculatorseth.com. You see this one right here? So I can see that if we go below that dotted line, that says to me that longs are being stopped out. And then we get to here, that's the average average seller position. So that means that the sellers are losing money. So that's going to be my first target. And then, I think that because of the way that it's trading, it wouldn't be unreasonable for us to go all the way back up to 38.50 today. I don't think that they'll get quite that far. In fact, probably in this case, I think that we should be drawing a retracement here, not a Fibonacci retracement, but I just want to go to the 50%, right? Which we're actually pretty close to. So I guess we'll see what they do here. We're going to watch the order flow and see what they do here. So what is my informational edge? Well, that's one of them. I can calculate people's positions and see where their average positioning might be from in futures. That's an informational edge, right? I can watch the market depth, and there's things that I know about the market depth and how it tends to behave that tell me things about if we're, in a good spot or not, right? Those are informational edges. If you don't have that, don't trade it. If you don't have a plan, don't trade it. If you don't know when you're going to get out, don't trade it. If it's moving too fast for your platform or your execution or your broker to keep up with, don't trade it. Look at Nokia and AMC. You know what? I was looking at Nokia for a long-term play. Has it been moving today? AMC, I'm not so sure. Here's the issue with the movie theaters is that they're, like HBO Max, they've been putting all of their videos like straight up on HBO. So if you get a margin call, don't trade it. I'm Vlad, I love you. By the way, because there's so really, normally we get about 50 viewers a day, and I have a really dedicated audience here. And I just want to give you guys all a shout out. Vlad is here every day. Win is here every day. Rich, even though he thinks all of my trades are dumb, I still like him, and I've learned so much from Gary. Price action, I don't know if I have seen him here today, but he's been around for a really long time and does a lot for the stream. And then of course, probably my two closest friends, Bots and Ace. Man, I tell you what, man, Ace, the trades that Ace posts here in the chat are just amazing sometimes. Yep, Ace. Pierrick is a little bit new. It's been like, a month, but he's been here every day. That's great. So many guys. And if you are new here, again, I just want to say we do this every morning. So we're watching the futures markets, but we've been watching individual stocks more and more because so many crazy things have been happening. But so if you want to join with us, the easiest way to do it is not just to subscribe to the channel, but also click the bell icon, because the bell icon will ensure that you see every video that gets posted. So when you go to the YouTube front page and we're live, it'll be like the first thing you see, and then you click in and it's easy, right? Or, another thing that happens is I know that not everybody wants to watch every day, because sometimes having somebody speaking in your ear while you're trading isn't helpful. My everlasting dream is to be as good of a trader as everyone thinks I am. I feel you. I feel you, Ace. You know what? The crazy thing though for you, Ace, is that you really are truly a great trader. It's just that like people don't realize great traders have trouble too. Lewis, there you go. Lewis is another one that's been around for a long time. Thank you guys so much. Anyways, I know that you might not want to watch every day's video, but you may still want to be aware of every day's video. So then you click the bell icon. That will make sure that you still see it and then you don't forget about it, right? Because we share good stuff. I have a good video today. It's a very curve-fitted sort of a thing. It's something that's very specific to this market, but I think that it's an indicator and information that for a lot of you guys is things that you haven't seen before, and it will be really useful to you. So before I go here, I just want to pull that up for you. I'm going to put it here in chat, actually. Let's see here. Where is it? Here it is. So I'm just want to give you guys this. There's also a lot of links. I'm not going to go through all of them, but I have a bunch of stuff in the video description where I got a website and a Patreon, and you can buy the mugs. The mugs are so great. I think they're like what, $15? And I mean, that's what it is. Why did GME do what it's gonna did? Why did GameStop do what it did today? Traders gonna trade. Anyways, check the links out. But it is time for me to go. I'll give you guys that link. It's quit while I'm ahead when there's 500 people here. It's amazing. But thank you guys for watching. Oh, I guess one more thing is that we have a Discord. So if you want to get in contact with me, you can send me an email or a Discord. I'm very available. I'll answer any kind of questions that you guys have. This guy, I swear. I know I yap too much. I really do. But it is time for me to go. So I will see you guys tomorrow. In the meantime, stay profitable, friends.